Welcome back to Everything Tesla Stock, everyone. Over the years, various stock analyses and Tesla bulls have made a number of predictions on the performance of the company. There is now one more item on the list, but this time it's a significant and unusual item. Discovery that Tesla stock, which is currently trading for a staggering $3,369 per share, may possibly be worth much more. This information was provided in a report by a multi-million-dollar investment company utilizing a discounted cash flow model for Tesla for the next 30 years. But why did they give such a bizarre evaluation? Well, Tesla has already done the unbelievable and skyrocketed. But could it repeat the action? When? Let's see how everything measures up then. It's quite bizarre. Tesla stock is still moving in the right direction despite its recent struggles. Who knows though? Consider giving the $3,369 stock price some attention. Let's investigate. Before we get started, if you enjoy this kind of information, click the like button, subscribe, and enable notifications to stay informed about what Tesla is doing. Hold On is a renowned worldwide equity management company with a history of investing and innovation. The Sydney-based company estimates that Tesla shares, which are currently trading at $673 as of this writing, are worth 5 times their current value. Following a year of research, Holland's managing director and portfolio manager Heath Bank and its research director Tim Davies published a 144-page report on Tesla. According to the research, a share of stock is worth $3,369. Tesla is making significant efforts to develop completely autonomous vehicles, including the robotaxi, whose rides will be less than bus fares. The question now is, are these projects genuinely feasible? The profitable market for Tesla's innovative growth strategies means that the projects are highly likely to materialize. Tesla is likely to fund a project whose market gives the firm a high valuation and enables it to raise money at a reasonable cost. According to Holland's analysis, Tesla achieves industry-leading profit margins that are far greater than those of its competitors that manufacture internal combustion engine vehicles, thanks to the employment of robots and artificial intelligence throughout the entire manufacturing process. Similar to how it controls its own distribution channels, Tesla has much larger profit margins than conventional automakers who rely on dealer-distributed networks. But there's no denying that Tesla can increase its sales with the right strategies. Tesla could significantly expand output while lowering operating costs if it adopts a modular manufacturing strategy to add production capabilities and capacity to its current and future factories. The problem, which also poses the biggest threat to Holland's projections, is that there could not be enough raw material supply to meet the demand for lithium-ion batteries. Lithium supply must increase by 298% if Tesla is to reach production estimates until 2030. Tesla will also need to make a lot of changes. Produce enough electric cars to meet demand. Following the Russian-Ukrainian crisis, the auto sector is currently experiencing manufacturing constraints, and Tesla is not exempt from these difficulties. Investors have expressed some anxiety as a result of this, since missing these goals could have an impact on the stock price and valuation. Their worries were further increased by Tesla closing its San Mateo, California, office and eliminating positions with autopilot staff. After numerous analyses, the stock decreased its estimates. However, based on Tesla's rising reputation, this shouldn't be a cause for concern. According to Holland, Tesla can easily turn the anticipated rise in demand for electric vehicles into a significant cash boost if it can successfully overcome its challenges with raw materials. By the time Tesla's free cash flow reaches $500 billion in 2037 and $1 trillion in 2047, dividend payments and share buybacks will be able to begin as early as 2025. If all goes according to plan, Tesla might have long-term investments totaling $20 trillion by 2050. Additionally, it was projected that Tesla's revenue from EV software and energy production might reach $2 trillion before increasing to $3 trillion in 2039 and 2047, respectively. For Tesla, there is a lot in the works. However, it's not great if we become overly enthused about Tesla's more speculative growth prospects. However, it might also be a mistake to have too low of expectations for Tesla. Long-term valuation is not determined by the present constraints, and there is a good probability that Tesla will turn out to be worth the $3,369 asking price. With strategies in place for both the short and long term, Tesla is well positioned to dominate the EV market and may soon become too powerful to be challenged. Over the next 5 years, a new Gigafactory is expected to open in southern Europe, India, and China, according to Holland. Given that Tesla's two brand-new gigafactories in Berlin and Nevada will shortly begin producing goods, the hoopla surrounding this might be justified. Additionally, Tesla might raise its yearly car output to 5.5 million in 2025 with improved production capacity. Tesla is capable of exceeding several of Holland's predictions for a variety of reasons. The business has a solid reputation in the field of autonomous driving software, which offers it an advantage over most of its rivals. Additionally anticipated for 2025, Tesla's FSD Level 4 autonomous system will be another significant accomplishment for the company. Furthering the point, Tesla's newly included energy solutions, which incorporate solar panels, battery storage, and electric automobiles into a single offering, offer Tesla owners the possibility of long-term cost savings. The majority of Tesla's rivals, including GM and Ford, are currently mired in a $250 billion debt and will find it difficult to stay up with it. The business makes use of its advantage to collect a sizable amount of data, which is necessary to create and test an efficient autonomous system. And Tesla has produced a number of amazing products as a result. According to Holland, Tesla will rule the market for many years to come. The managing director of Bank & Holland also noted that this tendency in car purchasing is probably going to change in the upcoming years. And if favorable, Tesla's price might see a sharp increase. Having said that, investors can be concentrating on the stock's present performance rather than the underlying fundamentals of the company, which is typically to a stock's major disadvantage. The fact that Tesla is currently selling at 44 times Wall Street analysts' forecasts for free cash flow in 2024 should go without saying. Holland's earlier predictions suggest that there may be more to Tesla's stock than what the general public is aware of. Based on past performance, Tesla is probably going to continue to hold the top spot in the EV market and grow production in the upcoming years in order to increase its profit margin. However, nothing is guaranteed, and just like with any company, there is still discussion surrounding Tesla's valuation, so you should only purchase the stock if you believe it to be worthwhile. What do you make of these estimates, though? Can a share of Tesla stock really be worth $3,369? Comment below and let us know. Click on one of these two videos on your screen while you're still here. Hello there.